Welcome back to Ray CRE Broker. If you're involved in retail commercial real estate, whether you're an investor, a broker, or simply someone with a stake in how this sector performs, this episode is for you. Today, we're cutting through the noise to break down the key trends shaping the retail landscape in 2025. We're talking real data, strategic shifts, and the big picture you need to see clearly if you're making moves in this market. So let's jump in. The retail market in 2025 is defined by two words: cautious optimism. While other sectors are still feeling out the economic terrain, retail continues to show steady strategic growth, and a big part of that has to do with vacancy rates. Across most of the US, we're seeing vacancy levels near 20-year lows, and that's a clear sign of strength. This is because we've got strong demand colliding with a limited supply of retail space. And what's keeping this market tight isn't just demand, it's the fact that construction hasn't kept pace. Many retail owners are adapting by repurposing space, rethinking formats, and right-sizing their stores to meet local market needs. It's all about agility and fit-for-purpose footprints right now. One of the biggest shifts this year is the explosive demand for suburban retail. People have moved out of the city cores. Hybrid work is here to stay, and retailers are following that migration pattern. The prediction for 2025? Demand for suburban space is expected to outpace urban space by 50%. That's a major shift, and it matters for investors and brokers alike. Retailers are responding with smaller, more flexible footprints. They're designing stores that fit local demand and integrating omni-channel strategies. Think click and collect, curbside pickup, and seamless online to in-store experiences. We're also seeing a big push for features like drive-thrus and dedicated pickup lanes, especially from quick service restaurants. And this aligns with what shoppers want most: convenience close to home. In fact, foot traffic in suburban centers is up 15% year over year. That's a critical metric if you're looking at location value or tenant potential. So let's talk regional focus. The Southwest and Southeast are leading the charge. As some national retailers consolidate or close underperforming stores, prime locations are opening up, and they're getting snapped up fast by expanding brands. The big boxes once occupied by the likes of Toys R Us or Steinmart, those are being refilled by off-price retailers, fitness centers, and value-based chains. We're seeing an extremely healthy backfill cycle with new entrants like Burlington, Crunch Fitness, Marshalls, Home Goods, Ross, Hobby Lobby, just to name a few. And even with that churn, vacancy forecasts remain under 5.5% in these regions. That's a competitive environment and a signal that demand is still outpacing supply. Now let's talk about the consumer. Today, they want more than just a transaction. They're looking for immersive, tech-enhanced, and sustainable experiences. Retailers are delivering that through smarter, smaller stores. Average footprint reduction is projected at 20%. Heavier investments in tech, both for operations and customer engagement, and eco-conscious design, which has gone from nice to have to must have. And while the spaces are getting smaller, the payoff is big. Sales per square foot are projected to increase up to 25% in these next-gen stores. So if you're developing or repositioning property, now is the time to build for flexibility, experience, and efficiency. Because of limited new construction and increased demolition of older stock, existing space is getting more valuable. That's driving rising rents, longer lease commitments, 10 to 15 years in some cases, more interest in mixed-use developments. The format is changing too. Think of smaller urban versions of big box retailers or hyper-targeted local concepts from major national brands. Retail spaces are increasingly part of larger live-work-play environments, especially in suburban and infill locations. And that trend is accelerating across Austin and San Antonio, areas I'm actively working in every day. And as I touched upon earlier, technology is everywhere now. From site selection to operations to energy efficiency, smart buildings are becoming standard. Retailers and landlords are using data more than ever for better location analysis, to improve customer flow, and to ensure properties meet evolving ESG expectations. ESG meaning environmental, social, and governance. Sustainability isn't just a trend, it's a competitive advantage, and tenants want it. Consumers demand it, and assets that check that box are increasingly easier to lease and sell. When we zoom out, the Sunbelt continues to dominate national rankings for retail investment. Dallas, Austin, Miami, Tampa, Charlotte, these metros are top tier for one reason: jobs, migration, and business climate. Each has a unique driver. Austin for tech growth, Miami, global capital, Nashville, healthcare and entertainment, Tampa, logistics, Charlotte, finance, and Dallas, just about all of these. And the result? Retail demand is higher in these markets, and suburban formats, especially grocery anchored and mixed use, are outperforming. So how's investor sentiment? For well-located, well-leased retail, cap rates are holding tight. That's a sign of confidence. It's still a competitive space, but there's belief in long-term stability, especially for assets with essential services, strong tenant credit, and future upside. We're also starting to see opportunities in distressed or underutilized retail where repositioning can unlock value. So what's the bottom line? Retail is evolving fast, but it's not fading. In fact, in places like the markets I work in, San Antonio, Austin, and the Rio Grande Valley, it's thriving, driven by lifestyle shifts, limited supply, and smarter strategies. If you're investing, advising, or operating in this space, your success in 2025 will depend on your ability to target the right markets, prioritize flexibility and tenant mix, embrace technology and sustainability, and think creatively about repositioning. This isn't the retail of yesterday. This is the retail that works today and will win tomorrow. Thanks for listening. If you found this helpful, I'd love to hear what you're seeing on the ground or talk through your next retail move. Be sure to subscribe for more insights, and until next time, I'm Ray Kang, Ray CRE Broker. Stay sharp and make more money on your deals.